The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 19th terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. You can do that right now, and if you can't dial in, you can always send me an email, steve@tfnn.com. Just inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific, could-be turnaround Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 29 points. She's trading out at 23,128. S&P's off 3. NASDAQ 100 down 37. Russell is off 8. Those are down about a little over 0.5% to the downside. Semis down 0.6% or $7, $8. You've got the trannies down 0.7%. Those are the ones really providing the biggest sell signal out there. Trading out at 98.26. Spot volatility next up only 4%, up 44 cents. Gold is up $6. Silver 24 cents. You've got Adobe Systems as a leader dollar-wise to the upside. 17 buckaroonies, nearly 12%. Silicom Limited, I believe that's the sand people out there. They're up $11 or 18%. Ulta Beauty Salon having a beautiful day, up 4% or $8. Gravity, defying gravity, that's up 5 buckaroonies. To the downside, it is AutoZone, not in the good zone, the red zone instead. They're down 11.40, maybe 2%. Google off $11. Amazon down 9. Tesla is off 7. United Continental Airlines down $7 and change out there. In fact, let's start with yesterday. We did talk about Tesla. I can't recall who that was for, but then I got an email after I had signed off from Addie. She wants to take a look at Tesla from a long-term standpoint. I believe she had Solar City. Those shares were converted to Tesla shares. She's hanging on to them and was really just looking for a long-term, and I don't know if I did that. And then Ivy had asked about ticker symbol ORAN. Now, Ivy, we're not really going to take a look at this ticker symbol here, ORAN. You're asking me for information, and I'm just really not going to be able to give you a good guideline. ORAN, or Orange, is the name of the company. They are a telephone operator in Africa, other places overseas. I believe that if you really wanted to trade this, if it were me, I'd go find out what exchange this is actually on. And what I mean by that, the home exchange, and this probably that way. And I think this is a European, company, so it's probably part of the FTSE. Just going to guess. If you want to trade it, and that way you're not going to deal with all these currency conversions. You see all these gaps in here? Those are all really created by, well, they won't be all created, but most of these that we're taking a look at, I believe, are currency-oriented. And so for me to look at this chart and provide you with any reliable, good information, it's just not in the cards, and therefore I wish it were. but I just prefer to be 100% honest. Tesla, that's a different thing, right? We can go take a look at Tesla. We can answer for Audie with regard to Tesla, TSLA, what she's looking for, which is, hey, long term, what is this doing? Now, we may have covered this, and you just weren't listening yesterday, Audie, and it says, if we look at so when you're looking at long term, I'd focus on the weekly and on the monthly chart out here. And on the weekly and the monthly, where Tesla is likely headed to, and I say likely, is up into the 386.99 level. And the 386.99, that's going to be a stiff resistance area. The trading range on this is really between 311.83 and 386.99. From a long-term standpoint, there's really nothing to do unless you see a close below 311.83. That is the current weekly TAS market profile. If you get a close below that, then there's some troubles out here. And not that Tesla can't get down there and test it, because it certainly had a wide-ranging bar with good volume, 56 million shares, back on the trading week that began July 3rd, 2017. So right now what you are in is a consolidation. I don't know if it's building a base to bust out. The answer would be yes if it closed about 386.99. You were asking where's the buy point on this. Well, it'd actually be down to that 311.83 area, and you'd certainly like to see from a weekly perspective volume that would be less than, I would give you the more conservative number of 49 million shares out there. So you got a consolidation. What's it look like beyond that? If I take a look at it on a monthly basis, there was a swing point from September in 2014. There was 132 million shares at that swing. You really passed it with volume back here the month of May in 2017. So longer term, if it in fact can bust out of the top of the TAS market profile at the 386.99 level, then this has an A to B equals CD that perhaps it would get it up to the 477.57. You'll see the 1-to-1 out here gives you a price projection of 405.61. That's so close to 386.99 that's not really a big deal out here. So I don't see anything bad, but I do see a longer term, right now, a consolidation pattern that it has been in since June of 2017, so well over a year out there. So thanks for writing in, and I hope that helps you out with that trade. Now, let's go back and take a look at, okay, so what are the markets doing, right? Because you saw that open this morning with the Dow down, I don't know, close to 100 points or something like that. And we've, pared back those losses, only down 27 points. Now, when the Dow was moving lower this morning, and I addressed this inside the newsletter today, it's really important, as you know, what you do know, to understand where Stevie's red line is. Because unless price, now I'm referring to on a daily basis. Let's go take a look at the Dow Equities Futures contract. Unless price closes below that, then this is not a selling opportunity, at least as far as the Dow is concerned. Now, for those of you that want to try to sell a top tick or buy a bottom tick, I'm not talking to you. So shut those ears up. We're looking for really some type of change in trend signal for some type of retracement inside the Dow. That could, in fact, get you back into the 22,250-ish type area. That's where I would identify the move to as we speak right now. That could be different come tomorrow. But right now, 22,979 is the number out here. There's nothing as we speak right now other than the fact that the Dow Equity Futures contract is going to go ahead. It looks like, well, I can't say that. I just take that back. I can't finish that thought because that was a bad thought. It was an incorrect thought. I have bad thoughts all the time. But when we get back from this break, let's go take a look at the other indices. Let's go take a look at the S&P 500, New York Stock Exchange, anything that you want. See you at TFNN. Right.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we go take a look at the other indices, we've got James. He writes in, hi, Steve. Hey, hi, James. Is Apple a buy here at 155.15, trading at 155.31 as we speak right now, or wait until about 154.18? 154.18. So that's the number that you have derived, because I don't see anything on my charts right here, or not at all. At any price. Well, Apple is certainly a buy at some price out there, so let's get that off of the table. Is it a buy right here, right now? If you and I were just simply to rely upon our TAS market profiles, that is the blue horizontal lines. It's a daily chart that we're looking at. One could derive a scenario where it is, because price is at the top of the box, 155.07. So in other words, price just came back to a level of support. Now, the last time that this had any volume in it to the upside was just a few days ago when it gapped up. There were 24 million shares. This is pulling back with 26 million shares. So there's more sellers than there are buyers here. And I would say, even though it's pulled back to level 1 of support, I see two other levels of support on a daily basis, 152.70, 150.34 out here. The swing point of September 25th has 44 million shares, the bottom of which is 149.16. The top is 151.83. I would sit tight. I would sit tight. This could be the beginning of an A to B equals CD to the downside. Could also be an A to B equals CD to the upside. The downside one looks like this, and you would know that if, in fact, price pulled back to that September 25th area and then made the A to B equals CD pattern, maybe 1-to-1 gets you to 145.09, maybe it's 140.80, somewhere around that area. That's only potential pattern as we speak right now. So it's out there. Now, it's a little bit more than potential as we speak, because as we take a look at Stevie's other charting tools, we're going to see that price here is gapped down below Stevie's red line. And you will see that that price oscillator is down near zero. And as if, in fact, price continues down continues lower, down. What the Sam heck is that? And doesn't take out Stevie's red line to the upside, which is 157 even Steven out here. We're going to have a falling price oscillator below zero, and this says to me lower prices, at least back to that September swing point. If volume is picking up, then you could potentially see an A to B equals CD to downside. So my answer to you is keep those hands in your pocket. No Apple today. Not today. If it closes above 157, then I'd say fire away, go for it. I was wrong, but I would rather pay that $2. It's not even $2, $1.75 right now for some type of confirmation, and it's I don't see it in the Apple cards as we speak just yet. So likely lower prices to go for Apple. Now back to the indices out here. Well, let's do this because we got an email that I read this morning, came last night from a listener, a longtime listener that was listening to the segment that I do on Tom's show. Don't know if he actually listens in on this show or not, or the archive. And it basically was suggesting that, as you know, I have been talking about the fact that there are patterns inside this market that says that the market wants to decline. Now, was that it today? People can go ahead and blame it on whatever they want. China, the DAX, whatever. The reality is you and I have been looking at these patterns here for, unfortunately, longer than I care to say. But we have been looking at the New York Stock Exchange, which is basically up near its highs right now. But if we take a look at and really the NASDAQ composite, okay, and what we've been watching is the advanced decline oscillator reading, difference between 19 to 39-day moving averages, exponential moving averages of the advanced decline data. Oh, that is a mouthful. But that's what that line represents out there. Now, above the zero line, good. Below the zero line, bad. What do I mean, good or bad? Above the zero line, buyers are the ones in control, period, end of story. Below the zero line, sellers are the ones in control, end of story. Inside the NASDAQ composite, we've had sellers in charge of this market for days, yet prices continue to rise. There is only one resolution when that pattern occurs, and that is you're going to see some type of market pullback. What I don't know is whether it is just a sideways consolidation from here over the course of the next many days, or whether it's really the beginning of a decline out there. I don't know. Nobody else does. We can go take a look at some other tools to try to get that feel. But yesterday was a close in the New York Stock Exchange. That's the left-hand panel chart, below zero. Today is just further, even though we've seen a nice little bounce back. We're still down below zero. So there is more to come. Now, inside the Dow, it still has declining tops, so to speak, in its advanced decline oscillator, even with the move that it had yesterday and even today. So there are some problems out here. Now to your favorite and mine, the spot volatility index. We talked about yesterday, and I think that was the same figure. I think it was 1041, the 50-day exponential moving average. We're trading at 1046 right now. You can say, Steve-O, does 5 cents make a difference to you? And the answer is, goodness gracious, yes. Oh, boy, does it make a difference. If we close above 1041, that's a 50-day exponential moving average, that's just another feather in the cap that there is more downside action inside the markets. In fact, if you're bearish, you want to see just a slight close over that. You don't want to see the spot volatility index close up as to where it was trading earlier, close to the 12 levels, 11-something area, and then have a one-day rate of change in the 12, 13, 14, 15% area. Because then you don't know if the next day is a bounce or a bottom. You just know that there's going to be some type of bounce that could turn into a bottom that would form out here. In fact, if we were to see that today, let's say market just, for whatever reason, starts to fall apart going into the closes at the low of the session, spot volatility index and the futures contracts careen higher out here, it could very well be the bottom. It could just be a one-day wonder to the downside. I'm not going to go there because I'd have to show you too many different things that have to take place in order for that to occur. It's just something that earlier today, like around 9:45, 10 o'clock, 10:30, somewhere in that range, as I was looking at the charts, I was saying, oh, man, look at this. Look at this. Now, there's nothing for us to look at right now. So how am I going to summarize this? Because when I was showing all these divergences, going back to this email here, and it was interpreted as being very bearish. When I'm very bearish out here, that's when we see such a total change in trend in the market in the top. Then you can call me a bearish type person. When I show you divergences that say we're getting some type of market top or there's going to be some type of pullback, that's just simply retracements. That's just and that's all that we're really in store for here. If in fact the market is forming some type of top, we're just looking at an overbought condition that would be working its way off. What do you mean, Steve? Well, if you just simply took a look at the New York Stock Exchange as one of our tools or indicators out here, earlier in the day, its advanced decline oscillator, and I've just switched to a different chart out here, was down at around minus 100, minus 95, something around there. Look, when that reading gets down to the minus 150 level, you know to start searching for bottoms out here. And there wasn't a ton of price damage inside the New York Stock Exchange. This is just a slow roll. Watch the spot volatility index. That'll be one clue as to what tomorrow foreshadows for you. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 23, S&P down 2.5. Okay, a question is posted in the den. Steve, if the spot VIX index closes here, as I look at it, this is a shooting star candle. So let's go take a look at that. Let me just pull up the VIX, and we'll take a look at that for you so everybody can see what it is that, well, that's assuming, what the heck? What the Sam heck? Let me, give me uno momento, por favor. New chart. Let me see here. I'd like to make this a visual since most of us learn visually out here. So let's go ahead and put this. Let me finish reading the question. Shooting star candle does not bode well for the VIX rising within the next week, and from what I see is almost always 5 to 7 days of declining VIX, anything that would make this time different. Well, let's go take a look at my other chart's not working that well, and except that I could do this, which is, so I'll tell you what, Danny, I'm going to come back when we come to the break, I'll come back to your question because I could do a little bit of work on the chart out here and just identify all, at least the previous shooting star candles inside the spot volatility index and put the 50-day on there, and we can go ahead and take a look at that together. Of course, what you know and I know is it's really the candles. It's very hard to call the candles midday as to what it's really going to look like at the end of the day. But that's okay. It's okay for us to go ahead and take a look at that. I will say that I will go ahead and give deference to the closing price of the spot volatility index and its 50-day. To me, that has got more importance than the candle. But I am always open to learn something new. So we'll go try to take a look at just shooting star candles inside the VIX. And one thing about a shooting star is it either works or it doesn't. And so the conclusion of if it is a shooting star the next 5 to 7 days, I don't have the number of days, but just like a hammer is a bullish candle, shooting star is a bearish, single reversal candles out there. And shooting stars, the majority of them either work in their meaning is that they continue to move lower, as Dano was pointing out. Hammers, not always the case. In fact, you like to see price come back into the middle of the body of a hammer, not the body, the middle of the wick of the hammer candle within 7 days for a buying opportunity. Of course, if you go ahead and you put volume with that matrix out there, it's always a better deal. So we'll come back to that. But let's take a look at the S&P 500. That way I'm not taking a lot of time trying to decorate a chart during a valuable show time. Now, inside the S&P 500, as we speak right now, we do have a gap to the downside. So on this chart, we see an A to B equals CD to the upside. I'm going to go ahead and get that off. That was the 1 to basically be between a 1 to 1.6 and a 1 to 2. Let's get rid of that. That was one pattern. We have a 7th wave move. That is the move off of the low out here from August 21st. That's letter number G on my system. We can go ahead and get rid of that for the time being. We've got a TD sequential count. That took place yesterday. That's number 13. You need to see it close below the bar 4 bars ago, 1, 2, 3, 4, and we are not there yet. We were there earlier, so if you close down towards the low of today's session, you would get that confirmed sell signal. However, what we do have is a gap to the downside. If this gap stays today, then you have a confirmed bearish signal, and all it needs is some additional price erosion tomorrow. Doesn't matter whether it gave back the gains. Doesn't mean the pattern is going to go ahead and work out, but it does say to you and I that you now have a pullback signal. Where would price pull back to? I would be targeting Stevie's dashed lines at 24.96. Now, that's on the cash indice. Is that what I would really be paying attention to? It would be one thing I'd be paying attention to. I'd be paying attention to the equity futures contracts. I'd be paying attention to the shorter term equity futures contracts like 30 and 120. I'd be paying attention to market breadth out here. If we take a look at the market breadth, yesterday we talked about the importance of switching from the 60-minute time frame. That's this one, the 1 hour time frame, which, by the way, just as we were coming on for this segment here, during the show, just switched over, just crossed over to the bullish side on a 60-minute time frame. On the 4-hour time frame, we had a cross earlier this morning. It has now vanished. The reason why we're paying attention to the 4-hour, a little bit of less jockeying around. If we're going to see some type of change in trend out here, you're going to see a bearish crossover. So it's going to really be all about what does this look like, not at 1:35 in the afternoon, what does it look like at the end of the day? And then as we're going to take a look at, we would take a look at to the downside action. We'd be watching that minus 150-ish level in the New York Stock Exchange should things play out that way. Now, inside the New York Stock Exchange, a different reading. We can't trade the New York Stock Exchange per se, or in reality, price was also moving higher, doing less relative energy. There is no bearish signal just yet. I don't know what the end of the day session looks like, but right now the answer is not just yet. So that is the markets overview. So, well, the Nasdaq Composite, if we take a look at it, you've got a gap to the downside. Can I find any real significant pattern? Yeah, I can see the A to B equals CD that completed and confirmed today with the gap to the downside. That then says that the Nasdaq Composite wants to trade back into the 64, 63, 75 type area, come back into the swing points from the end of September. That would be the target area for it based on the current daily chart out there. Now, I don't see any other questions just yet, but I'm going to take just a quick peek because if you sent in a question, I want to get to it, which I will also get to Deano's out there. Okay, so let's go cover some of the other things. The other things being, I'm sure there's a question about gold. What is gold doing? So let's go take a look at gold. Let's go pull over the gold contract, trading up $7 at $12.90 right now. What you're going to see as we speak is that gold has bounced right into Stevie's red line. You might say, how does that work? And I would have to tell you, it's rocket science. That is truly how it works out here. And that rocket science says all that gold has done is another little counter trend rally right into resistance. You have the price oscillator below zero. You have price right at the Stevie's red line, the oscillator and change line. That just means that the price oscillator on the bottom panel is now just moving sideways. But that's not bullish. Price just bouncing right back into resistance as we speak right now, and that is Stevie's red line. What is silver doing? Hi-ho silver. Well, in the case of silver, just a tad stronger than Goldilocks as we speak at 137. Why? Because price is right above Stevie's red line, which is 1709. In order for silver, if the metals are going to break out, silver's probably the first one to give you that message, as it would then go ahead and take out the swing point from 2-3 days ago. And if it could do that, then that would set up an A to B, a small one, A to B equals CD to the upside. Is that going to happen? I don't know. It could happen, and if it does, your price target would be getting you back to the 1807-ish area. Could even be 1838. Do we have a confirmation on that? We do not. That's why I can't tell you whether it's going to happen. But I do know this. If you get above that swing point, then chances are it's going to head to that higher price. Steve Rhodes with TFNN. We get back. We're going to go rip apart the spot volatility index.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So what we're looking at here on our screen is the spot volatility index. And the question was, hey, in essence, if there's a shooting star candle that forms, which is what the candle session looks like right now, does that mean that the spot volatility index, because of the candle formation, is just simply going to continue to head lower, which is that's the case, and the S&P 500 would continue to head higher. So let's not pay attention to today's candle. And unfortunately, I don't know that this is going to be conclusive for you, Danny, but hey, it is what it is. If we take a look at the most recent spot shooting star candle that took place on the trading day of August 9th, that certainly did not push prices lower. The close of that session was above the 50-day exponential moving average. So, that tells you that really it is the sellers that are in control. But certainly that did not push prices lower for any period of time. The one just before that was July 28th. Closed below the 50-day exponential moving average, and prices really did kind of trade lower to sideways-ish for a period of 2, 4, 6 days out there. If we go to the one before that, that was on the trading day of June 12th. Did that work and push prices lower? That for a bit. I'm sorry, the one before that was actually this big one on June 29th. Did that push prices lower? No, it did not. That closed above the 50-day prices. Actually, the VIX spot volatility index went higher out here. You've got this big shooting star from back on May 18th, but I would guarantee you that was coming from a very oversold level inside of the S&P 500. Probably New York Stock Exchange was down below that minus 150 area, to set a nice little bottom, in essence, in the market May 18th. Here's a shooting star from February 16th. Price just really moves sideways to then eventually higher into that February 28th level out here. So we can go back for a long period of time. And I don't know that we see sometimes when it works, and that's the cool thing about a shooting star. So I said that when it works, it's like if things are going to go lower, you'll see that confirmation tomorrow out here. That's typically the way that shooting stars work. If they work, they're going to work, and if they fail miserably out here. Kind of like the one out here, Dano, from December the 7th, 2015. Shooting star, boom, the spot volatility index went higher the very next trading session. So I hope that helps you out. And if not, I don't know what to tell you. It is what it is. What it is. Now, speaking of what it is, you're only down 2 points in the S&P 500. The VIX is only up by 18 cents as we speak. Watch the 50-day exponential moving average. I think that is the thing to do out here. Now, let's go take a look at, so we looked at gold, we looked at silver. Let's go look at the Japanese yen. We might as well have a party, and bonds. Let's go take a look at those. Important for us to do that. If we go take a look at the Japanese yen, Here is the December contract out here. And Japanese yen, just like gold, just like silver, price really just running right up into Stevie's red line out here, slightly above it. Does this indicate that the yen futures have found a bottom? No, not necessarily. Now, we are in days 1, 2, 3, 4, 5, 6, 7, 8, 9. And I had mentioned, not intentionally, but I mentioned when you form a hammer candle, as the yen did back on October 6th, usually you like to see price come and test the center of, right around the center of that wick out here by about day 7, really days 3 through 7. I've learned to not necessarily have rules that are so set in stone that you're just like a stick stuck in the mud. A mud, that's what I was going to say out here. And what the yen futures have done is really follow that pattern out here. And they've done it with getting down to the bottom of a TAS profile. But I'm still not ready to call this a bottom in the yen. If I were, I would be calling for a bottom in gold, and I would also be calling for a bottom inside of the 30-year T-bonds. And if we go take a look at T-bond futures out here, this is the chart that looks, well, similar to really what we've just been looking at. Price oscillator still below zero. It's turned up, though. It is still turned up. So this is the one that has the most promise out here. And by promise, if this is going to turn to the upside, just like silver would have to take out its most recent swing point, so too would bonds out here. And I know we had a caller yesterday was looking to go short the 30-year. I think that what we said was don't do it. Don't do it just yet. You wanted to short that when it was more up, in this case here, back when it made that 7th wave move, letter G. And that's when the yen futures were also at the top of their consolidation, and the top of that consolidation looked like this. So we just kind of said, you know what, it's too late. It's perhaps correct to say to be somewhat bearish on bonds, not be some, but to be bearish on bonds, but not correct to go ahead and take the trade. You want to wait till the consolidation pattern decides what it wants to do out there. So that takes care of the yen. That takes care of the T-bond futures. That being said, what else do we want to go take a look at? Anything inside the den? Is there anything that was posted? There was a question about the full moon or today's new moon out here, and I haven't really been following the new moons to know whether or not what type of impact that they might have on the market. So I don't have a I don't have any conviction one way or the other with regard to the new moon that's taking place today at 3:13, other than we're not going to see it. That much I do know. Okay, let's take a look at some stocks that are moving in the marketplace out here. Let's look at the ones that are moving to the upside. Let's take a look at Adobe, ADBE. Geez, a little crack in the voice. Wow, now that's a gap to the upside, and that is with volume. So Adobe really taking off. Let's switch this over to a weekly chart out here. And there, we already had an A to B equals CD to the upside. That's making the 1 to pi, 1 to 3.618. This is actually a new A to B equals CD that you'd put now, because you had a swing point that had only 9 million shares from a weekly perspective, taken out with 20 million shares. So you'd have to say that the new A to B equals CD, this is the conservative one, inside of Adobe, is going to give you a price move up into the 203, 220, 240 level. Trade at new all-time highs. That is ticker symbol ADBE. Nothing bad looking about the Adobe chart. If we go take a look at Silicom Limited, oh, that's got another wide-ranging bar. This is on a weekly chart out here. This is coming into a weekly previous swing point high that had 450,000 shares. You're at 319 right now. What we know about Silicom is it is going to go test its highs. That high specifically is 73.44. You are at 69.08 as we speak right now. Ulta Beauty Salon, ULTA. What do we see here? Not much. Ulta Beauty Salon from a weekly perspective looks like to take out the swing with volume, 9.7 million, and it, with 12 million. So the weekly chart for Ulta says it's not done cruising to the downside. 120.43 is its price projection. based upon the weekly chart for it. Let's go take a look at AutoZone. We'll leave this on a weekly time frame out here. So on a weekly chart, doesn't really look that bad, even though you've got it's a leader to the downside right now. Out of curiosity, I'm going to just switch to the daily, see what we have going on out here. Yeah, no big deal. Maybe AutoZone pulls back to 565.10. That would be your buy. 565.10 to 576.76. Steve Rhodes, TFNN. Right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the last couple of charts that we'll take a look at out here, or at least the next chart that we're going to look at, is the monthly chart for the S&P 500. That's what's up on our screen right now. We're taking a look at the horizontal trading range boundary lines. Now, in the case of the S&P 500, these are on a monthly chart. This system here goes ahead, scans each bar that has formed, and looks at the opening and closing price, and then tries to identify the largest number of those. That's why I kind of refer to them as co-located. Doesn't matter whether it's an open or a closeout here. And then what it does when it finds those, it goes ahead and gives me a nice big, well, I tell it to give me a nice dashed line. That's between the price points of 11.10 and 13.16. We use these as guidelines out here. We don't use these necessarily as exact prices. Once you have that equidistant value, just simply continue to add to the top and or to the bottom to come up with the next levels. Because what occurs out here, and so it's 1316 to 1110, we're at 2553 right now, is that tends to identify floor levels that can be difficult, that can send prices shooting lower all the way back down to the bottom, maybe to the midpoint, or maybe to a weekly or a daily horizontal trading range level out here. And the S&P 500 is really up at a critical type area, which is 2554. On my screen, it says 2553.90. Now, if you clear that, or when it clears that, and it will clear that. I don't know that it's going to clear it today, tomorrow, or maybe 2 weeks from now, whenever it is. But when it does get cleared, the next price projection becomes 2760 and a bit of change out here, 2760. But right now, we know on a monthly basis, we're up against a resistance zone. So, too, when we take a look at the horizontal trading range for the Dow. 23,093 is its number. We're at 23,131. So, and if you take a look, these work really well at giving you different price projection areas and where the trouble is. Long-term bull market. We can only pray for a nice little retracement. Steve Rhodes with TFNN. Folks, stay tuned for your favorite polar bear of mine. That's David White. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.